So hi everyone, it's Wisdom Jordan right back here, and this is lesson 11 of Forex trading. So in this lesson, we are going to be looking at three types of market analysis, and this is a brief introduction to market analysis. So we shall look at technical analysis, we shall look at fundamental analysis, and sentiment analysis. So we are going to start off with technical analysis. So technical analysis is the framework in which traders study price movements. So theory is that a person can look at the historical price movements and determine the current trading conditions and potential price movement. So the main evidence for using technical analysis is that theoretically, all current market information is reflected within price. So if price reflects all the information that is out there, then price action is all one would really need to make a trade. So I want you to note that history tends to repeat itself. So basically, what technical analysis is all about, if a price level held as a key support or resistance in the past, traders will keep an eye out for it and base their trades around that historical price level, right? So technical analysts look for similar patterns that have formed in the past and will form trade ideas, believing that price will act the same way it did before, right? So for example, when you look at the chart below, so we see here that the price goes up and then it goes down and then it moves sideways and then it goes up finally. But every time the price hits that level, it follows up. Then it hits this level again, it falls up, hits this level again, falls up, hits this level again, falls up, hits this level and falls up, hits that level, and then finally still falls up. So what does that give a trader? So what the trader will do, the trader will always come and wait for the price to come, hit that level, bounce off, hit that level again, bounce off, hit that level, and then they put a buy order. So when they put a buy order, when the price hits this level, it hits it and then it goes up. Put a buy order again, hits that level, and then it goes up like that, like that. So that is what technical analysis is about in short. So technical analysts use charts because they are the easiest way to visualize historical data. So you can look at past data to help you spot trends and patterns, which could help you find some great trading opportunities. As more and more traders look for certain price levels and chart patterns, the more likely these patterns will manifest themselves within the markets. You should know that though technical analysis is very subjective, different people look at the exact same chart setup or indicators and they end up with different ideas of where price may be headed. So the key features within technical analysis that we shall look for in detail would be things like support and resistance, trend lines, chart patterns. We shall look at technical indicators. We shall look at Fibonacci correlations. We shall look at charts. We shall look at cycle phase distributions, etc. So that will be under technical analysis. So that is a brief introduction to technical analysis. So technical analysis will put into consideration the study of price action, and which involves the study of different support and resistance levels, the action of price on different trend lines, and the information of different chart patterns, how the price responds to different technical indicators, how the price responds to Fibonacci correlations, and how the charts look like today and how they have been looking like within the previous dates. And then we shall also look at how the price forms with a cycle phase distribution and the technical analysis. So fundamental analysis is a new type of analysis. So we looked at technical analysis. Now we are looking at fundamental analysis. Fundamental analysis is a way of looking at market by analyzing economic, social, and political forces that affect the supply and demand of an asset or of currency you want to trade. So using supply and demand as an indicator of where price could be headed is a little bit easier. So the hard part is analyzing all the factors that affect supply and demand. So in other words, you have to look at different factors that determine whose economy is strong and whose economy is weak. You have to understand the reason of how and why certain events like an increase in unemployment affect the country's economy, and ultimately the demand for its currency. So that is what that is what fundamental analysis is all about. So the idea behind this type of analysis is that if a country's current future economic outlook is good, their currency should strengthen, and therefore you should be looking for a way to buy it. So the better a country's economy is, the more foreign businesses and investors will invest in that country. This results in the need to purchase the country's currency to obtain those assets. So fundamental analysis is simply all about how is the economy of a given country and how will it affect that country's currency. Okay, so that is fundamental analysis. So sentiment analysis. So under sentiment analysis, the market basically represents what all traders, including you, anyone in the United States or anyone having dinner in a restaurant, they feel about the market. So sentiment analysis is normally basically what the people or what the traders are feeling about the market. Each trader's thought and opinions, which are expressed through whatever position they take, helps form overall sentiment of the market. So the problem is that traders, no matter how strongly you feel about a certain trade, you can't move the markets in your favor unless if you are the big banks. Why? Simply because you buy small units of the market, so you cannot be able to control the market as a trader. So in summary, we looked at technical analysis, and we said technical analysis is the study of price movements on charts. Then fundamental analysis, it takes a look at how the country's economy is doing. Then market sentiment or the sentiment analysis determines whether the market is bullish or bearish in current or future fundamental outlook. So bullish means going up, and then bearish means going down. All right. So fundamental factors shape the sentiment, while technical analysis helps us to visualize that sentiment and apply a framework of our trades. All the types of market analysis work hand in hand. I'll repeat this. All the types of market analysis work in hand. Do not forget that. So technical analysis is important, fundamental analysis is important, and then the market sentiment is also important. So thank you for watching this video. We shall be looking at market analysis at a greater level as the future comes. All right. So in the next lesson, we shall be looking at types of charts. So thank you for watching this video. Do not forget to subscribe. My name is Wilson Jordan, and I will see you in the next lesson. Bye bye.